Hello, everybody. Welcome to Price Links. My name is Phil Flynn. I'm Senior Market Analyst at the Price Futures Group, as well as a Fox Business Network contributor, coming to you live from the S&P pit. And here's a guy that knows a lot about the S&Ps. He knows a lot about corn. He knows a lot about sugar. Branch Manager Frank Petricca of the Price Group. Great to have you back, Frank.
Great to see you, Phil.
Frank, you know, you're amazing. You're the kind of guy that looks at the market different than a lot of the average trader. You know,
Absolutely.
A lot of guys today are like computers, like, what to buy, what to sell, I want to go back and forth.
No.
You look at the big picture when things are too high and too low, and there's two markets that have caught your attention.
Phil, I'm done trading at 9:30 in the morning.
Nice.
I'm through.
That's the way to be.
Yeah, I check my positions, all long-term positions. 9:30, I'm done.
What
I
about
go
these
play
other guys
golf.
that can't even go to the bathroom because they're in front of the screen? They
Well-
got to watch ticket. Oh my gosh, I missed the trade.
Well, here's
Yeah.
here's the way I trade. Basically, I look for markets in the lower 25% of the long-term trading range
Okay.
or upper. And when my long-term formula changes,
Right.
up or down,
Right?
I put positions on and go play golf.
There you go. And a lot of people, it's almost a lost art, the position trade. People don't seem to do it the way they used to. Why is that?
Do you want me to be honest?
Yeah, be honest. That's what no, I want you to lie to me,
Brokers?
Frank. That's what I'm here. No, of
I'll
course
be
I want you
honest.
to be honest.
Well, this
Yeah.
is kind of tough to say, but
Yeah.
it all has to do with brokers and commission.
Really? Okay,
Oh, I
gotcha.
think.
You
I
think so?
think. Yeah, that's what
But,
I think.
But wait a second. What about these
And-
guys?
and here's the thing. No.
Wait a second. I'm going to hold you on that because
Okay.
you get these
Go ahead.
guys that
Go
are
ahead.
at Interactive Broker, for example, or these real deep discount houses, and these guys are trading themselves back and forth 300, 400 times a day. And there
Right.
isn't nobody's telling them to
And-
do that.
And there are people that are traders, that are
Right.
novices,
Right?
that don't know much about commodity trading.
Right?
And they'll get into the market and they will be advised to get out. The first time, when they get
But I'm
into
talking
the
about
market,
these guys with these programs, that are in and out 4 or
well,
5 times. They're in front
I've
of the
never
screen all
seen
day.
I've never seen anybody like that make money in commodities.
Really?
Never.
Never. Okay.
At least I didn't for 20 years.
Right. All right. Well, all right. That's interesting. Let's go back. You had two markets that you really like. What are those two markets? And tell me why.
Sugar and corn.
And why such a divergence of those?
Well, first of all, again, they're in the lower 25% of the long-term trading range.
Uh-huh.
My long-term formula is up.
Right.
The sugar trade is very interesting. We have two deficits, production deficits in a row now.
Really?
The last time sugar had 2 years in deficit, market went to 36.
Really?
Yes, in February of 2011.
Right.
Now, I'm not saying that can happen, but buying
Right.
the market at these levels at 15 or 16 is excellent.
Now, if you're going to do that, would you be doing futures contracts? Would you
Yes.
be buying puts
No,
to
no.
protect it?
No, futures contracts.
Just straight
the
futures
market's in
contract.
the lower 25%.
Right.
If my long-term formula turns down, we will be out.
Okay. And where would that turn down, do you think?
Well, that depends
Right.
on my work until
Right.
9:30.
I gotcha.
Yeah.
Okay.
Yeah, I check my work, early in the morning.
Right.
And I find out what's going on with my formula, and then I execute positions.
Gotcha. And so you're looking a little bit of fundamental. You add that in with the technicals of being in the lower 25% of the range.
Mm-hmm.
So you would say this is a high probability trade to sit and hold.
No guarantees, but it is a very, very high probability.
Now let's go to corn. You
Not
hear
so
there's a lot
much.
of corn
Yeah.
out there,
Yeah.
and the
Yeah.
fundamentals aren't really as strong.
Well, here's what's interesting about the corn market. We have 2 big crops in a row.
Right.
Big,
Right.
big crops.
Mm-hmm.
And we still have stocks to usage
Right.
in the lower 25%, around 10 or 15%. Now, in 1985 and 1986, stocks to usage was at 70%.
Right.
So when you think about 12 to 15% with 2 big crops in a row, the world is consuming a lot of corn. As a matter of fact, the last USDA report did showed
Right.
that world stocks are declining.
Right, right. So you've got world stocks declining, and you're getting into a situation where the supply and demand balance is tighter because of what we've seen before. And even though it looks like we have a lot of inventory, the percentage change, if demand goes up a little bit or supply goes down a little bit, you can get that much more of a move.
It's all about weather.
It's all about weather.
Right now, it's all about weather. And I will tell you, if we have any kind of weather scare at all or decline in trend line production, we will see corn prices go back to $6 or $7 this year.
Awesome. Well,
Yeah.
I know there's got to be a lot of
And guess
traders
what,
out there.
Steve?
Yeah.
Phil, I'm sorry.
Phil, Steve, that's
Guess
good.
what? If corn goes to 6 or 7,
Right?
I'll be in it.
There you go.
Yeah.
I like
if
that.
sugar goes to 36,
Yeah.
guess what? I'll be in it.
That's it.
Yeah.
Because you're going to get
And
into
that's-
position and hold.
Right. That's
What
the
about the
secret.
rollover? Because you get into sugar with the rollover. Sometimes,
Right.
you know, what month are you looking at? Are you looking
Right.
at the front end of the curve
Well,
or the back end of the curve?
Right now, I'm buying July.
Fine, July.
Okay, now when we roll positions, most of the time we'll lose money.
Right.
Although there are some times we will make money.
Right.
Okay,
Right.
for instance, the cattle roll.
Right.
I made $6 on the roll.
That's nice.
Because of the spreads
Nice.
differential.
Very
yeah,
nice.
exactly. But then there are times when, you know, I might lose a cent in the sugar market
Well,
or
it's just
10
a
cents in the
cost
corn
of doing
market.
business, keep it rolling
Correct.
for the long term.
Exactly.
Frank, this is why you are the best, and that's why I love to have you here, because you really do study this market. You've been doing it for a lot of years, and I really thank you for being here.
Thank you
How
so
do people
much.
get in touch with you if they want to see your market?
You know,
better?
I'm glad you asked me that. I have 30 and 40-year long-term charts
Wow.
that I'd like to offer for free.
Wow.
Contact me at 312-286-9320 or jfl.711@comcast.net. My website is longtermfrank.com.
All right, long-term Frank. Thank you, buddy, for being here, and thanks, everybody, for price.
Thank you.
There you go.